All right, let's dive right into this explainer. We're unpacking exactly why MongoDB's upcoming May 28, 2026 earnings call is shaping up to be, frankly, a massive showdown. We're looking at a classic heavyweight bout here. On one side, you've got a highly anticipated AI innovation cycle, and on the other, the very real gravity of macroeconomic pressures and fierce competitive threats. Whether you're holding MongoDB stock and trying to gauge its future, or you're an architect deciding on your next tech stack, this call is going to be a bellwether for the whole data industry. Because they aren't just dropping another quarterly update, they are out to prove they are the definitive data platform for the AI era. To really get the stakes, we have to start with this absolutely massive number, $96 billion. That's the total addressable database market. And get this, only about 10% of it has migrated to cloud-native NoSQL so far. So we're talking about a multi-decade runway just moving off on-premise legacy systems. To put that into perspective, despite living in this hyper-advanced AI era, a shocking amount of enterprise data is still literally sitting in basements on relational databases that are older than the developers managing them. So when we talk about growth accelerating or decelerating today, keep in mind we're looking at a gigantic pie where 90% of the market is still completely up for grabs. So here's our game plan for today. We'll set the stage with the May earnings setup, dive into the Atlas growth engine, explore this new AI catalyst, weigh the looming headwinds, and finally, give you a concrete scorecard of exactly what to watch when the numbers drop. Let's jump straight into Section 1, the May earnings setup, and why it's such a pivotal showdown. MongoDB is coming off a massive Q4 reported back in March, right? Revenue hit a record $695.1 million, up 27% year over year. But then we hit a wall. Look at the steep drop here. Investors are heavily scrutinizing this deceleration, from that 27% growth down to the current FY27 full-year guidance of just 16 to 18%. Management is guiding for $2.86 to $2.90 billion for the full year, and let me tell you, that 10-point drop in the growth rate is the most fiercely debated data point among analysts right now. Is management just sandbagging to be conservative, or is there genuine macro gravity pulling them down? For the specific quarter covering February through April 2026, management has laid out these explicit expectations. They're calling for $659 to $644 million in top-line revenue, which is about 20 to 21% growth, along with roughly 65 cents in non-GAAP EPS. But I want you to mentally circle this next number, approximately 26%. That is the baseline growth expectation for Atlas, their cloud database service. That single metric, that is exactly what Wall Street will be laser-focused on come May 28. Which leads us perfectly into Section 2, Atlas, MongoDB's absolute core weapon and growth engine. If you want to understand MongoDB's financial heartbeat right now, just look at this massive 75% slice. Atlas, their fully managed cloud database, has completely consumed the rest of their business model. I mean, it basically is the entire growth engine at this point. And that concentration is a bit of a double-edged sword. It proves they've successfully nailed the transition to a modern cloud-first model, absolutely, but it also means any little hiccup in Atlas's growth directly compresses MongoDB's entire overall narrative. Atlas runs on a consumption-priced model. It's basically like a utility bill. The more developers leave the lights on, scale up from a prototype to a full-blown production app, the faster that revenue compounds. And it is compounding. Just last quarter, Atlas powered an incredible $521.5 million in revenue, all by itself, growing at 29% year over year. That is just massive scale for a single product line. Keeping that specific consumption engine humming is literally priority number one. So, why does Atlas keep winning? It really comes down to developer ergonomics. Their flexible BSON document model is basically a dream for rapidly evolving schemas and deeply nested data. You combine that with horizontal sharding for massive scale and total multi-cloud neutrality across AWS, Google Cloud, and Azure, it's a powerhouse. But again, that 75% concentration creates a real fragility, especially when you consider that non-Atlas enterprise growth has severely slowed down to the low to mid single digits for FY27. MongoDB is no longer flying a two-engine plane. They are cruising almost entirely on the Atlas engine right now. Moving on to Section 3, the AI catalyst. Enter Voyage 4. Okay, if Atlas is the engine, Voyage AI is the high-octane fuel that management is praying will push them past that conservative guidance. Just 2 weeks before this earnings print, they launched Voyage 4 and automated embedding in public preview on Atlas Vector Search. Guys, this is huge. It's the very first concrete monetization signal we've seen since they acquired Voyage AI back in February 2025. It fundamentally shifts MongoDB from just being a passive storage locker for data into an active toll booth for AI computations. It opens up a brand new revenue line based on API call consumption and embedding storage right on top of their existing compute revenue. And they didn't just drop one model. They released an entire family of them tailored for different needs. We're talking standard, large, light, and nano versions of Voyage 4. But the absolute standout here is the multimodal 3.5 model. This uniquely enables applications to operate on text, images, and structured data simultaneously. Think about that for a second. Imagine an e-commerce app where you can type in a search, upload a picture of a shoe you like, and cross-reference live inventory data all in literally 1 millisecond. That's the kind of magic multimodal unlocks, right inside the database. The whole play here boils down to differentiation. MongoDB is offering a seamless, all-in-one AI data foundation. You've got the operational database, vector search, embeddings, and re-ranking, all integrated into one managed platform. Because let's be real, developers do not want to spend their weekends playing IT Frankenstein, duct-taping Postgres for their data, Pinecone for vectors, and OpenAI for embeddings just to get a basic prototype chatbot off the ground. MongoDB is betting the house that this level of simplicity and integration will absolutely dominate developer mindshare. But, of course, every hero faces gravity. Let's shift to Section 4, Headwinds and Threats. The market is ruthless, and you really cannot overstate the threat of pvector right now. Investors are practically demanding explicit data on MongoDB's win rates against this specific open-source Postgres extension. For developers building new apps that need less than 50 million vectors, pvector using JSONB has become the good enough and basically free option. And in tight macroeconomic times, a just-use Postgres default is incredibly dangerous to premium-priced tools. It's easily the most cited competitive concern dragging on MongoDB's story today. And it's not just Postgres. MongoDB is fighting a massive multi-front war. You've got the hyperscalers like AWS, Azure, and Google Cloud aggressively pushing their own bundled databases from the left. Then from the right, you've got specialized vector databases like Pinecone and Qdrant competing fiercely for those extreme-scale workloads. Down below, open-source alternatives are nipping at their heels. Throw in the general commoditization of AI infrastructure costs and really tight IT budgets across the board, and you've got yourself a remarkably crowded, cutthroat battlefield.
All right, let's bring it all together. Section 5, the earnings scorecard. 5 things you need to watch on May 28th.
Now that we know exactly what they're up against, here is your actionable scorecard for when those numbers hit the wire. First up, we need to see if top-line revenue actually hits the upper end of that $659 to $664 million guide. Second, can the Atlas growth engine fight off this deceleration? The guidance implies about 26%, but let me tell you, what the street really desperately wants to see is a re-acceleration pushing back up toward 28%. Do not underestimate those 2 little percentage points. On Wall Street, that is the literal difference between a massive stock rally and a punishing sell-off. The final 3 items to check off your scorecard are all about momentum. Number 3, we are looking for concrete adoption metrics and API consumption signals for those new Voyage 4 models. We need undeniable proof that developers are actually using it. Fourth, listen closely for a strong defense of the full-year FY27 guidance. They absolutely must maintain or raise it. And finally, number 5, we need to see that the non-Atlas legacy trajectory is stabilizing. Because if that legacy business keeps bleeding out, it's just going to act as a massive anchor dragging down all the heavy lifting Atlas is doing. If MongoDB can actually deliver on that scorecard, well, this quote perfectly sums up their ultimate long-term bull case. They're positioning themselves as way more than just a document database. They want to be the default, integrated AI data platform that stays completely cloud-neutral, sitting squarely in front of a multi-decade $96 billion migration opportunity. If they pull it off, it's a monumental setup. So, I'll leave you with this final thought to ponder before the print drops. Will their brand new, deeply integrated AI stack prove completely unstoppable, sparking a whole new era of hypergrowth? Or will the combined gravity of good enough alternatives like pgvector, hyperscaler bundles, and tight IT budgets just drag their trajectory right back down to earth? Keep your eyes glued to that Atlas growth number on May 28th because it is going to tell us absolutely everything we need to know.